We have an expertise that we have honed over decades. How do we get people to recognize our value?
Hi, everybody, and welcome back to Housing Insiders, the podcast for founders, builders, lenders, and regulators, and anyone who believes that everyone should be well housed. I'm Jonathan Lawless.
And I'm Jeremy Potter. On Housing Insiders, we're trying to bring you the conversations you won't hear anywhere else about the ideas that are actionable and innovative.
Yeah, today's conversation is brought to you by us. We're going to have kind of an interesting episode.
Right.
Happy summer to everybody. As always in the mortgage industry, summer it wasn't a quiet time. Lots of things happening. But today we thought we'd do something interesting, just because Jeremy has some news to share, and I think it'll lead to a great conversation. So, Jeremy, I asked Claude to write your bio, and it did a pretty good job. But then I was like, I don't want to read this damn thing. Probably half our listeners know you well, if not all of them.
I hope so.
But do you want to give us a quick tour of major mortgage milestones?
Well, I hope that in listening to Housing Insiders, we've been able to establish some credibility on all the things we've tried to do or have done. Of course, the biggest kind of piece of my background was just that I got into it as a regulatory compliance attorney. I was one of the early Dodd-Frank attorneys. And so that allowed me to go in-house very early on for mortgage companies, including obviously Quicken Loans and Rocket Mortgage. And so my time there also allowed me to move into a more business role, an entrepreneurial role. And it wasn't long before I was also able to try new businesses, entrepreneurship, startups, and a whole bunch of other policy and consulting things. So the fun part for you and I think, is that a lot of our interest has gone above and beyond where we started, not just housing finance, not just mortgage, and tried to bridge across what most customers of this industry see as one thing, getting a house or financing a house, but what behind the curtain is often seen as multiple industries: real estate, title, mortgage, appraisal, inspection, insurance. And in reality, hopefully my career in some way has overlapped with a little bit of each of those. John, I was at a conference last week for appraisers, my first ever appraiser conference that I've ever attended. And somebody from Rocket was there and made a really funny comment that he met me when I was in my title era, when I was working in the title insurance industry. And so I decided that maybe in a future iteration of my bio, I have eras like Taylor Swift, and I'm now in my podcasting era or something. I don't know. But today we'll talk about my newest era, the Eras Tour and I appreciated that comment. I thought it was funny, and I'm trying to be humble about it, but we'll see.
Well, all right. The appraisal era has begun. So let's hear about it. So if you haven't been following Housing Wire or Jeremy's LinkedIn page, Jeremy's just taken a role at Kelley Blue Book Homes, a familiar brand name, I think, to many people, maybe not in the housing space. But why don't you give us a quick sense of how this opportunity unfolded for you? Like, how'd you hear about it? Who's involved? What drew you to it?
Of course. Yeah, I've been excited. Obviously, I'd heard of Kelley Blue Book. I've used Kelley Blue Book for a used car valuation, shopping. But what I learned in joining the company was it's a 100-year-old brand. 2026 is actually the 100th year of Kelley Blue Book. Many people who are listening will remember it was a physical blue book for a while with car values in there, and obviously became a web tool and an online tool. And the founder of True Footage, an appraisal firm that is one of the largest, if not the largest appraisal firm in the country, 135 appraisers nationwide, has been VC backed from the beginning. I met John Liss, the founder, out of business school when he pitched Rocket Mortgage on 3D appraisals. And I was responsible for innovation at that time. And so I've known John, the founder, over 5 years. Now it's maybe even more than that. It's probably like 7 years now. And we've stayed close during events, inviting each other to different events, making introductions where possible. And I was actually a consultant for True Footage before joining full time. And so when it came time as a consultant working with John to raise the Series C for the company, John noted that one of the investors interested in the Series B and then eventually the Series C was the owner of Kelley Blue Book Auto, Cox enterprises. And so John approached Cox and said, this is something we'd always thought about. I think consumers would really like it and understand it. And so the idea was, what if we raise the money for the Series C and own and launch Kelley Blue Book Homes in partnership with the Kelley Blue Book Auto folks and the Cox Enterprises team? And so that's exactly what we did. They invested and led the Series C into True Footage, a property valuation appraisal company, and which I can talk about more. And then we were able to launch a consumer facing and real estate agent facing brand, Kelley Blue Book Homes. So it is the official Kelley Blue Book. It is the badge. It is the history. It is the expertise that from the auto side, now working with homeowners and shoppers on the house side of the economy.
It's amazing, and so random. I'll say, like you said, a lot of people know the brand. The brand is an incredibly valuable brand just because it's everyone knows knows it. Although
That's right.
what I would say is, I don't think people think, "Wow, Kelley Blue Book has been an innovator," or has been doing a lot. Honestly, I don't know if they still publish a book, or like I haven't bought a used car in a long time, so it's probably one of the reasons I don't know them. But like, give us like what has Kelley Blue Book been up to? Is there still a physical book, by the way? And what do you think motivated them to start exploring housing?
Yeah. So, John, if you haven't used the online tool in a while, it is now an online tool. You get what you might expect. Tell us a little bit about your car. What are the mileage? What's the color? What's the make and model? Do you know your trim level? And what condition do you think your car's in? And one of the things that Kelley Blue Book did innovate on was the fair market value range. Because as you know, if you sell a car yourself, it might take a little longer. It might be a pain in the ass, but you can get more for it on a private market sale than the very quick and easy dealership trade in or dealership negotiation. So Kelley Blue Book really innovated on that range, giving consumers a sense of what is a used car at the dealership going to get me as a trade in or as an otherwise negotiation, and what could I get if I did this myself. That range, you'll hear in a second, is pretty pivotal to how we're thinking about houses as well. So fully online, and believe it or not, John, something like 60% of adult Americans used Kelley Blue Book last year. So a lot of activity still going on in the used car market and online. What we adopted on the house side, as you probably can imagine from hearing me describe that, is tell us a little bit about your house. So this does two things. One, you're getting primary source responses and data from homeowners. What is your impression of your house? Answer some of these questions, but also tell us what you think. Hugely valuable, as you know, to the real estate community to get that real source data from the homeowner, but it also provides just enough. I think what they call in lead gen, they
Mhm.
call it friction. You know what I mean, John? Like just enough friction that this person has intent. This person really is interested in getting a valuable response, a real response about the value of their home, might be considering doing something as a result of that. And so our view is if you can, answer a couple questions, hang in there on the form, tell us a little bit about your house. We can give you a directional value that is within 3% of what the home would ultimately sell for on the market. Now, it doesn't mean you're going to sell. You may have just been curious. You may be interested in financing. You may be interested in renovating. You may just want to compare to your neighbor's house like we all do. But the reality is, if we can get you within 3%, then real estate agents will trust the tool, homeowners will trust the tool, and it'll really bring some confidence to an otherwise uncertain process.
I mean, well, first of all, 60% is fucking bonkers. I mean, I had no idea that they had
Isn't
that
that
kind of
crazy?
brand. That's crazy. And congratulations. It's so much more meaningful than I had thought, that percentage of the population engaging with the brand every year. Incredible. But to that point, people do buy and sell cars frequently. So, like, probably go into Kelley Blue Book to shop for homes, or shop for cars, or to sell a car. What do you think the draw is on the housing side? Like, how do you think that'll translate? Do you think people like? I mean, we know that the Zestimate is the primary way that people judge their neighbors, or like judge their personal wealth. Like, do you see Kelley Blue Books kind of filling that need? Like, what do you think is going to drive people to Kelley Blue Books related to their home?
Yeah, the way I like to think about it is, what gives us a right to exist? Why should we exist? Why do we exist? And we think it is the feeling, that insecure feeling you have when you start down the path of thinking about selling or moving. It's such a big decision. It comes with so much both emotional weight to it, but also just logistical weight to it. It's a lot to have to do, to pack up your house, to find a new house, to move to a new house. And it's usually or often around these life milestones, but it also just comes with uncertainty. To use the cars as the example again, like, I don't know what a car's worth. I could absolutely be taken advantage of. I feel insecure talking to a mechanic or talking to a car dealer about a car because I never had that experience. I don't know that asset well. I don't know that machine all that well anymore these days. It's like a computer to me, essentially. A house, we know a little bit more. We have a preference. We have a gut feeling that we understand what we like when it comes to houses. But the value remains this very tricky question. And really, it shouldn't, John. I mean, what we're saying at Kelley Blue Book Homes is, given the amount of data, the amount of partnerships, the ability to get information and data quickly from homeowners, we should be doing better as an industry at getting the answer to the primary question everybody wants to know: what's my home worth today? And they don't know that. And that feeling of uncertainty around the kitchen table in conversations with your spouse needs to be more certain. It just needs to be more confident in 2026.
Yeah, absolutely. And so I guess there's kind of two parts to the. I guess two additional questions. You can take whichever one you want first. One is there's no shortage of companies out there that are trying to answer that uncertainty. And I mentioned Zillow, but you got Redfin, Open Door. So how do you get in front of? How do you get people to start associating Kelley Blue Books with the house? So that they're just even aware of this. So that's kind of a let me just start with that. That's a distribution question. Is it it sounds like you have a network of AMCs, potentially some other partnerships, but how do you get consumers to start associating KBB with homes?
Yeah. So I think that's the key question, which is, what is it about the current environment that hasn't solved the problem? I think two things. One, the way that AVMs and other kind of directional values have been offered is, I think, comes with two really difficult obstacles. One, the actual data being used is at a very high level. It is not expert level data sourced on how the market actually works. It is backwards looking at recent sales. So good, but not great. Decent, but not what you need if you're going to make a very important decision like this. And then, second, it's often presented in a way that it feels biased by whomever presented to you. You named a couple of them: Zillow, Redfin. Well, what do they want? They want you to transact. They're not independent in this relationship. They have a vested interest in you selling your house or refinancing. And so, what we're trying to do here is present the true independent expert that does not have that problem, that does not have an actual commission at stake in the transaction. And that's a big change, to stay independent and figure out the revenue model to keep these reports free to homeowners, but also remain independent so that you make the best decision as a homeowner for your family and your situation, whatever that might be, is the key difference. Lastly, I'll just note, and this is more a product design thing that's kind of always bugged me, but you see it a lot out there. Because one AVM is not good enough to kind of carry the weight of a transaction or a website, a lot of websites will list four or five of them, as if a consumer is
Mhm.
supposed to be able to navigate these brand name AVMs that are all stacked up and seem to be anywhere from 30 to 80 to 120% off of each other. And so I think it's gotten very confusing. As certain data sources got more sophisticated, they ended up confusing the market more rather than less. And so we're trying to bring some simplicity to an otherwise sophisticated data science operation behind the scenes, but make it easy to understand, give you your range. In the homes model of Kelley Blue Book Homes, what are we trying to offer you? Here's the low end of your range. If you have to sell quickly and you don't want to do any work, you're likely to get this. And if you work with an expert, if you work with a professional, if you do what you're supposed to do and you market it properly, you should get the high end of this range and at least give people, the bookends based on data science to make the best decision for them.
I mean, that's fantastic. And I certainly think, I am actually personally considering a move. And a key variable in that is how much will I be able to sell my home for? Now, I haven't gotten to the point where I've actually started looking at estimates, but I was going to go pay $15 to clear capital to get my sort of AVM value from there. But maybe I should be using Kelley Blue Book. And so one of the challenges that we talk a lot about for startups is just getting to consumers, is getting them to like understand that it's what you do, and like the distribution is really critical. And so how do you, like, again, if you're hitting 60% of the population with Kelley Blue Book, I mean that's massive. Where and how do you get in front of consumers? Just succinctly, what's the strategy right now?
Yeah, I'm thinking about it a couple different ways when we talk short, midterm, or long term. But right now, in the short term, we are marketing directly to consumers with the typical social media, digital, and other types of advertising in their market to say, do you want to know what your home's really worth? And we're getting pretty good engagement from both homeowners and real estate agents by seeing those ads out there and doing some of the more traditional advertising, performance marketing type stuff. And then like as we step into short to midterm, working with real estate agents so that they understand the brand and are using it and using their certification and their partnership to introduce it to homeowners as well.
Got it. Okay. And then on the valuation piece, I think you mentioned at some point that like most people just look at the past repeat sales. The advantage you have is you're sort of impartially asking people to give more data than you probably would be able to get from just looking at repeat transactions. I assume that's part of like how you establish a better valuation. Give me a sense, like, how do you know if somebody's opinion on like whether or not their porch is in good quality or whatnot? Does that really make a difference for how you can estimate their home value?
Yeah, I like thinking about what the consumer provides as like the extra credit or bonus that we get on top of the data science we're actually conducting. And I'll give you a very quick example of a big difference that stood out to me as I learned about these models. Looking back over public sales and looking at, let's say, three comps, which is a very typically used number in AVMs, but also in appraisals, it is generally speaking, you look at a 1 mile radius, a 2 mile radius, a 3 mile radius, you get to your three comps, you merge them and blend them. Maybe you put in some other MLS data, like a listing or two in the current market to try to balance it out. And that's really your picture. The way that people shop, though, as you know, having shopped for a home, and as many of our listeners know, having shopped for a home, that's not how it works. People don't shop within a mile or within 2 miles of a particular house. They shop based on where's the school, where's work, what do I have to get to? Am I going to be on a train or in a car? And let me take a look. So our model tends to use real shopper data and real comps across 6 years and as many as hundreds or even thousands of comps based on filters of the subject property or a target property. And all of a sudden, what you bubble up is dozens and dozens of comps. And I'll just use a place like Chicago as an example. You might actually see those comps across three train stations that are 2 miles apart each. So that there are actually comps that are 6 miles away or 10 miles away from other comps, but it's how actual shoppers shopped for that type of house. Oh, I need to be near a train station. I want to be within walking distance because I'm in the Chicago suburbs. I can use comps across those to say this is the likelihood of your house in Arlington Heights, Illinois, selling because I understand the patterns. And here's the best part, the data drives the patterns. So it's actually using the filters and the heat maps appropriately so that the story is almost obvious to the agent, the appraiser, the homeowner when they take a look at it to say, oh, that makes sense. That's how I think too. And so it's really trying to align less arbitrary filters and more direct filters on the data to help people really understand what's going to happen here.
That makes a ton of sense. And I do remember, when I was at Fannie Mae, I was proximate to some of the models we use for home valuations, and like the radius thing is always a challenge, right? Because like if I'm looking at a house that's on a lake, like the radius doesn't matter. Like I'm looking for houses on lakes, not the houses in the 2 mile radius of where the subject property is. So that makes a ton of sense.
You asked about that, like, primary source data inside the house. Just real quick on that. Once you have identified the comps and I have identified the subject property because the homeowner provided it, there are 2 things I just wanna mention. One, we're getting really good at reading pictures as an industry. This is true of Kelley Blue Book, but it's also true of a lot of different vendors, teams, service providers, data scientists. Computer vision is really impressive. And we're starting to see the ability to take MLS data, our tech or photo partners, as well as what we receive from homeowners, and put all that together to get a really good quality and condition rating. And then what the homeowner has to tell you is like, did anything change? They don't even have to be right about the condition or the quality rating themselves. Just if we know it changed, that changes some of the confidence level, some of the score. And if nothing changed, then you can dial in the confidence score that way. So I think it's really going to become much more about this. You heard me say confidence score there, but it's going to become much more about like, what can we do off of what we know instead of a binary relationship to property data the way it's been for years.
It's amazing. Let me congratulate you again and just like summarize a little bit of what I thought I heard. And I'm going to ask one more question before we take a break. So you've got an incredibly trustworthy brand that in some ways has a pretty large distribution kind of built in because of the brand. You've got associated appraisers, you've got a great valuation model, all amazing components to be able to step into a role and kind of work with. Give me a sense of what your role is and like who else is at the company with you.
Sure.
And then I've got a couple more business model questions, but we'll maybe leave that for after the break as we kind of get into the future of Kelley Blue Book.
Well, good. Some of what I'll tell you then will tease that because, on the Kelley Blue Book Home side, we are supported by True Footage, the appraisal company that has developed appraiser grade tools and technology for appraisers to use. And by the way, all our appraisers use it, but it's also sold to independent appraisers who agree, who want that console, who want that data analytics. And so we have independent appraisers who want to look at the market this way and be more efficient as they develop their appraisal reports for their lender partners and their other private order partners. So we're appraisers, we're building appraisal technology and using data and helping other appraisers be more expert. And that all fuels the Kelley Blue Book brand. The Kelley Blue Book team, you heard me mention John List, the founder and the CEO across what we're doing. I like to say that I have a little bit of everything from sales, marketing, strategy, and policy that I am thinking about. Partnerships falls into that role. So if you're hearing this and you think you can partner with Kelley Blue Book Homes, that's me. But also, we have a sales team, a team that is going out calling top performing agents all day, every day in these markets and saying, look, we see you on the activity sheet for how many deals you do. We understand that your team is built to accept relationship partnerships on the real estate side. Would you like to become a Kelley Blue Book agent? So we have a sales team doing that, and RJ Ford leading that. And then we have product and marketing working to make it really smooth for both the agent and the homeowner to see their deals, see their valuations. And when you are a homeowner, you get your custom profile for your house. So you can return to it, see your range, understand all the comps that were used, what your neighborhood looks like, and then some of the other things that you might want to do if you don't want to sell your house are all there on your profile. And we have folks building that. So the team is really moving fast right now. We went from 5 markets in our kind of beta test to 10 when we launched to the real estate industry, already at 12 to the general public. And we're hoping to be 20 by October and nationwide in the new year. So rapid expansion that's mostly serving real estate agents and homeowners right now.
It's amazing. It's amazing. All right, let's take a quick second for an ad, and then we'll be right back to talk more with Jeremy about his new role at Kelley Blue Book. Okay, so Jeremy has been giving us an overview of how Kelley Blue Book, the what everyone probably knows as sort of an auto valuation type of thing, has been moving into the housing space. Some incredible assets, not to mention Jeremy and several other people we know in the industry have joined up on the team. Jeremy, I want to kind of come back to the question of what Kelley Blue Book is doing in homes with a look at the business model and maybe sort of where this thing goes. Because we usually end our episodes as sort of like where you and I like to think about sort of innovation and head in the clouds and what the future holds. So, but let's start today. Kelley Blue Book, great brand, but you're going to have to make money. You're venture backed, it sounds like, although you've got the partnership with the owners of Kelley Blue Book. But what does the revenue model look like, at least in the short term? Is it a referral source? Where do you see that coming from?
Yeah, we tried a couple of different things with our early real estate agent partners and brokers that we spoke to, tested some different things with, and the feedback we got was pretty immediate. The referral model has gotten a bit tired. And in some cases, words like too much or greedy were used about the splits that have developed. I think a lot of real estate agents are familiar with commission splits at like 30% with certain partners. That's fairly common and supported by the industry. As you get to 35% or 40% of your commission as a real estate agent split with the source of that referral, I think what we heard was agents were ready to think differently about those types of partnerships. And so we went out with a subscription model instead. And what we told agents was you will have an exclusive right to a zip code, and we will give only you that referral, that advertising, that brand recognition for that homeowner in a zip code. And so right now we have agents subscribing to monthly agreements that put them in front of a homeowner as the option for the Kelley Blue Book playbook and the fair market value that we've said we believe is your home. That's done a couple of things. One, it does give homeowners someone to see, understand this is the expert in my area who partners with Kelley Blue Book. It also, though, gives the agent the exclusive ability to be in front of that homeowner. Obviously, the homeowner has to make the decision, the agent has to make the sale. But a lot of other providers, it seems, what we're told, sell the lead two times, three times, sometimes even more than that. And so the homeowner experience is to just get inundated with calls and maybe not even quite be able to keep straight who's calling on behalf of whom. I'd like all of that to get just easier to understand and very clear. If you want to work with a high performing agent in your area who knows how to run this playbook, here they are. And then you see them, you hear from them, but you don't hear from anybody else, and keep that pretty straightforward. So short term, we're subscription based for zip codes. And as we expand, you heard me mention some of the other technology pieces, how these reports can be used, how certification badge, Kelley Blue Book badge can be used are areas of exploration for us. So you asked about our team. Obviously, we have a deep team on the appraisal side of the house too. Rachel Robinson came over from Rocket. She's the COO of True Footage, managing all appraisal ops, appraisal relationships, delivery orders. We're signing up new lenders all day, every day for regular appraisal orders in their lending business. And so what's happening is we're able to then start to understand from those trends and those tools how we can better support appraisers and real estate agents. To me, that's always meant getting more proactive. So, in addition to the revenue model where we can sell subscriptions and we can partner with the real estate industry to try to create something valuable for homeowners that gives them confidence, that removes a lot of those questions, we also can do the same thing with appraisers. We can get, John, I'd love your feedback on this because I have a kind of bad habit of thinking about the credit side so often, having been in mortgage and having been the last 15 years, we've watched as the income assets and employment have gotten closer and closer to the direct source data. And then lenders have learned, the GSEs have learned how to build a file. And you heard me mention earlier, like confidence scores. On the credit side of the file, it's not uncommon to be like, what can we assure or what can we certify at what level of confidence given the data? And that's been an entire area of innovation, startups, and exploration on the credit side of the file. We haven't done that on the house. We haven't done how do we get what we know in, have an appraiser look at it and say, based on what I see, I can certify this or that along the way. So I'm starting to think about Kelley Blue Book Homes as an appraiser tool that continues to build a file. I'm 60% of the way to an appraisal. I'm 80% of the way to an appraisal. And that way, we're giving appraisers a new way to think about their role up in the transaction earlier in the funnel that can turn to lenders and say, we have independent data on this. I can give you indicative kind of directions, red, green, yellow type of stuff, where it says, this is what we know so far. We're on our path to a GSE eligible sale here. Here's what you're able to guarantee. Here's what you're able to certify. Here's what you're able to do as an industry. Again, remaining independent, obviously, but I think there's a lot that, what I hear from appraisers is we have an expertise that we have honed over decades. How do we get people to recognize our value? And I think bringing that value forward can be hugely beneficial for real estate agents and appraisers and lenders. And so we're thinking about that in the mid to long term as well.
I mean, I think you're going in the right direction, right? Because at the end of the day, and by the way, great hire for Rachel Robinson joining the team. Obviously, long time valuations at Rocket. She's incredible. She knows that inside and out, and particularly from the lender's perspective. But as we think, as you think about manufacturing a loan, most of IMBs aren't taking the risk of the loan per se. The risk is going to somebody else. So, like, is the property accurately valued really matters to the end investor. But what matters for the lenders and others in the process is just certainty and speed. Just giving consumers a great experience, because at the end of the day, someone else is holding the risk. So what they want, getting that accurately and quickly and not at a high cost recorded so that they'll accept it is where we need to ultimately get to make mortgage lending work. I mean, of course, it's different for a bank or other people who are holding the risk, or a jumbo investor or HELOC investor, for example. But for most of the loans we do, they just go to somebody else, and it's just like, how do I meet your requirements as fast as possible and have as much certainty through the process as I possibly can. So I think what you're building is going to have incredibly compelling values for lenders in the housing finance system. Let me just open that as a question. How are you thinking about engaging with IMBs and others in the industry? Is it mainly through the appraisal partnerships that they have, or how do you think of that as working?
Yeah, I think about it in a couple of different ways. I'll start with the appraisal relationship and then kind of go from there. To me, if the main theme coming out of the new rules following the global financial crisis, if the main theme was independence, what is more independent than having an appraiser evaluate a property before there's a lender? Get it ready, get it prepared. That is truly an independent valuation. So I think there's a lot of room there to tell lenders, hey, by doing something truly independent on your behalf, you're able to acquire or buy data the way you are used to in other areas, you can in this area. And so the example I often use, John, with what does the appraisal relationship mean to lenders is, and again, this is a what if, but let's think about it. What if the appraiser and the title work came in with the contract? You already have to upload a contract from a real estate deal into the lender's system. And we know when that contract hits the e folder, hits the folder that says this goes from pre approval to loan in process, a bunch of tasks are triggered. That is where the automation starts to fire all the things that have to happen. Well, if you're already bringing in that file, why not bring in other files that automatically check the box and limit the amount of tasks that now have to be done before closing? And so lenders love that, the idea that we might be working towards reducing some of this third party risk that they don't control anyway, because it is an independent appraisal. They can't control it. They're not supposed to control it as an independent appraisal. So why not move that off their plate as much as possible? I think the second thing is fallout costs a lot of money. And when you lose a loan after you've done all this work and you're really far down the line, it's one of the most expensive things that can happen to a mortgage company. And so they want to know as early as possible, to your point about certainty, that that isn't going to happen. And if it falls out, it won't be because of the house. So I'm finding ways to emphasize independence, show independence, but then also hopefully say, I can promise you, if you work with us, given our technology, you won't have a repurchase or you won't have an error on this loan that costs you a lot of money or that it ends up coming back to bite you. So whether it's fallout in process or repurchase risk, we think we can start to think about the process of delivering an appraisal as being more certain and more even indemnified in some cases than others.
I mean, first of all, since I'm building out a mortgage lending process right now, if I could get uploaded with the sales contract, a final validated appraisal that will give me rep and warrant relief or whatever, like will be considered a valid appraisal and I don't have to do it, that would be just an incredible. I mean, you take a step off the plate, you reduce costs, you increase certainty. I mean, that would be an absolute huge win for the mortgage lending space. I want to ask sort of a very broad question. I'm sure there's going to be a couple of things that you can answer, and let's maybe explore. I know you well enough, Jeremy, to know that you're not going to join a company for what you're going to do on day one, but you're probably already thinking about day 10,000, if not day 1,000. And so, as I sort of see Kelley Blue Book growing, and if it actually gets the traction, you now are in a position to have more data than others, more regular engagement from homeowners who now have a true source to see what their value is and might do it even when they're not shopping for a home or think about moving. They just might do it because they want to, like they do with Zillow today. That gives you an incredible data advantage. Talk to me about how you are seeing the company grow, what you think the real sort of moonshot opportunities are for Kelley Blue Book.
Sure. I mean, I think you hit it right on the head for today, which is, hey, look, when you're having fun and looking at a $10 million beach house or even more, $25 million Malibu mansion, if you're on a wedding weekend with your friends and you're like, I wonder how much this Airbnb is worth that we're staying in, you go to Zillow. That's fun. We all do it. It's fantastic for that. When you're serious about your biggest asset, about this decision we've talked about, we think Kelley Blue Book could be the place you go for that. And that ongoing, like you said, relationship around what is changing in my neighborhood. How come that house listed at that in my neighborhood or nearby versus what I thought it would be? Let me go look. Why? And seeing the comps refresh and seeing the data refresh regularly will be a nice feature for homeowners to say, got it. Now I understand. I feel more comfortable about my neighborhood and about my house. And then what do we build from there, John? To your point, I think one thing, and this goes back to my time at Rocket, even the thought process was, why don't I have a better digital picture of all of my assets in one place? Like, I own cars, they're in my garage. My garage is part of the house. Why are we not putting this together? So, midterm, future facing, why can't you just go to Kelley Blue Book and pick car or house or both and see your profile with all your cars, maybe even your wish list of cars, everything about your house, maybe even your wish list about your house or other houses, and get it in one place from a brand you trust where you know the data is coming and is from experts. It's from expert appraisers. It's from expert real estate agents. It's from the professionals in the industry who are going to have to deal with the transaction if you decide that you want to do one. So that's where now I've got a single picture from a place I trust. Now you can start to do a lot of interesting things, I think, around how do you measure. John, you and I have seen startups, all really great, well intentioned, trying to put a number on how much does this renovation cost in this market and what is it going to do for the value of the house. We want to partner with those people. If they're the expert on construction costs and they have what we have for the value of the house, why wouldn't we put that in there? Why wouldn't we let you know, hey, in your neighborhood, somebody just did a pool, it cost them this much, and their house went up $30,000 or whatever that number is for your area of the country. And then I think you will start to see people get a lot more comfortable with making choices about why to do the basement, why to do the patio, when do we want to move, where do we want to move. Ideally, if that is able to create more seamless transactions, then moving doesn't have to be as painful as it once was. And it doesn't have to cost 12 to 14% the cost of the house every time you go in and out because you have a much more confidence. The system is working more smoothly. Data has been brought forward. And so my hope would be that Kelley Blue Book kind of becomes a platform of value on which real estate agents and lenders can operate so that closings are much smoother. And I'm excited because I get to go to the appraisal community, who are our team members who work for us, and say, think about all the possibilities for an appraiser mindset to get orders that value a brand new ADU, that value a brand new townhouse complex, that tell somebody what adding a suite or adding a basement gym will do to their house. Like, all of those decisions, those are appraiser led decisions, in my view, to the point that you made earlier. That's what banks want. That's what Wall Street wants. If we're going to do any innovation on the financial side of the house, like different types of mortgage products, like shared equity, like fractional ownership. Well, what does fractional ownership and shared equity need? It needs a real time value of the shares at any time, because things happen in the market. You got to be able to mark to market your ownership. One of the things we struggle with today on fractional ownership and shared equity is mark to market on the value of the asset. We got to wait 90 days to find out what it's worth. We got to pay $1,000 to get an appraisal to find out what it's worth. I think True Footage and Kelley Blue Book can change all that, where you're starting to see appraisers working with the data to get really expert opinions of value out there and create a market.
I mean, absolutely incredible. Our listeners have probably already figured this out from what you're saying, but I'm going to belabor the point a little bit and just articulate it myself. I mean, every company has to go through this process of product market fit. They need to build their distribution. They've got to get their customer acquisition costs to a place where it makes sense, and they've got decent enough revenue. And I saw all this with Built, and at some point, if you really are successful, you get to the point where you become a platform, where you can start taking advantage of the network effects of all the different people that are on your platform, and then start thinking about all the other ways that you could leverage it. So at some point, if Kelley Blue Book reaches to that platform point, in other words, has enough concentration of owners and home renovators and appraisers and lenders and realtors sort of participating in the same sort of ecosystem, the opportunities are endless. And it really feels like one of the things companies struggle with is just brand recognition. Who are you? And the fact that you get to take a very valuable brand, one that I had no idea 60% of Americans are using every year. And that is a hugely valuable thing. And be able to turn that value into something like a platform for real estate is absolutely incredible. So I guess I have one last question for you. Maybe you can respond to that too. But our listeners, lenders, realtors, the founders, sometimes regulators, they probably hopefully are really excited about the opportunity that you've just started on. How do they reach you?
Yeah. So jeremy.potter@truefootage.tech, kelleybluebookhomes.com. You can see if you are in one of our 12 states today. You'll be in one of our states by the end of the year, likely, but go check it out. It is in some of the largest markets, some of the largest housing markets. So California, Arizona, Nevada, Texas, Florida, you'll see all those. You'll be able to give it a shot. So kelleybluebookhomes.com, jeremy.potter@truefootage.tech. We're going to be out there on social media. You'll probably see us doing some consumer facing media coming soon, and introducing more and more of the badge and the certification and that home picture to people in your market and in your neighborhood. So reach out. We want to talk to you, lenders, data experts. Like I said, anybody who thinks that that partnership might be valuable, we're looking forward to it. So thanks, John, for asking and giving me the opportunity. I'm really excited about it, obviously, but the chance to present it to our audience is fun, to be on the hot seat today.
Amazing. Well, congrats again. Go crush it, dude. I know you've got the strategy and insight and innovation network to really make this thing happen. So I look forward to selling my home on Kelley Blue Book Homes with one of your partners, maybe later this year.
Right on.
All right, guys, that does it for this episode. We'd love to hear from you. If you have any interest and suggestions on anything, email us at podcast@thehousinginsiders.com. What's really helpful to us, if you like our episodes, like what you hear, go onto whatever platform you're listening on, Spotify, Apple, and just leave us a review. Even just give us a star rating. The more of those we get, the better it is for us.
Thank you so much for listening. As always, let us know if you have a sponsor, If you have a guest, if you'd like to be on the show, or you just have feedback for us to do better, we want to hear that too. Thank you, as always, to Keenan Chen for the music.